Goods and Services Tax (GST) is a value-added tax implemented in Canada. It is a federal tax levied on the supply of most goods and services within the country. The GST rate in Canada is currently set at 5%. The GST system replaces the previous federal wholesale tax and combines it with a provincial sales tax. Each province in Canada has its own provincial sales tax rate, which varies from province to province. Some provinces have harmonized their provincial sales tax with the GST, creating a harmonized sales tax (HST) applicable in those provinces. The GST applies to a wide range of goods and services, including most tangible personal property, real property, and services, with some exceptions and exemptions. Businesses registered for the GST are required to collect GST from their customers on taxable supplies, and they can also claim input tax credits for GST paid on their business purchases and expenses. The revenue collected from the GST is intended to fund the government's activities and services, such as healthcare, education, and infrastructure projects. GST returns and payments are typically filed on a quarterly or monthly basis, depending on the business's annual sales and revenue. The administration and enforcement of the GST in Canada is primarily handled by the Canada Revenue Agency (CRA). The CRA provides resources and guidance to businesses and individuals to ensure compliance with the GST regulations and requirements. The implementation of the Goods and Services Tax (GST) in Canada was a significant step towards simplifying the tax system and providing a more streamlined approach to taxation. Prior to the introduction of GST, Canada had a complex system of indirect taxes that varied from province to province, making it challenging for businesses to navigate the tax landscape. GST was introduced in 1991 to replace the Manufacturer's Sales Tax (MST) and the Federal Sales Tax. The goal was to create a more efficient and transparent tax system by merging these taxes into a single federal tax. The provinces also had the option to harmonize their provincial sales taxes with the federal GST, leading to the creation of the Harmonized Sales Tax (HST) in some provinces. One of the key features of the GST is its broad base. It applies to most goods and services consumed in Canada, including imports and domestically produced goods. However, certain items are exempt from GST, such as basic groceries, prescription drugs, and most healthcare services. These exemptions help to ensure that essential items remain affordable for consumers. Businesses that meet certain criteria are required to register for the GST and collect the tax on goods and services they sell. They are also eligible to claim input tax credits for GST paid on their business inputs and expenses. This helps to avoid the cascading effect of taxes and ensures that businesses are only taxed on the value they add to the final product or service. The GST system in Canada also incorporates mechanisms to address the impact on low-income individuals and families. The Goods and Services Tax Credit (GSTC) is a refundable tax credit provided to eligible individuals and families to offset the impact of GST on their household expenses. The GSTC is designed to assist those with lower income levels and provide some relief from the tax burden. The administration and enforcement of the GST in Canada are carried out by the Canada Revenue Agency (CRA). The CRA provides guidance and resources to assist businesses and individuals in understanding and complying with the GST rules and regulations. They also conduct audits and investigations to ensure compliance and deter tax evasion. In recent years, there have been discussions about potential reforms to the GST system in Canada. Some proposals include increasing the GST rate or expanding the range of goods and services subject to GST. These proposals aim to generate additional revenue for the government or address specific policy objectives. 1. GST and HST rates. While the federal GST rate in Canada is set at 5%, some provinces have replaced their provincial sales tax with a harmonized sales tax (HST), which combines the provincial and federal taxes into a single rate. The HST rates vary from province to province, ranging from 13% in Ontario to 15% in Nova Scotia, New Brunswick, and Newfoundland and Labrador. 2. Input tax credits (ITCs). Businesses registered for the GST can claim input tax credits for the GST paid on their business purchases and expenses. This allows them to recover the tax they have already paid to suppliers, thereby avoiding double taxation. It helps to reduce the cost of doing business and promotes fairness by ensuring that businesses are only taxed on the value they add. 3. Small supplier exemption. Businesses with annual worldwide sales below a certain threshold can qualify as small suppliers and may not be required to register for the GST. As of 2021, the threshold is CAD $30,000 for most businesses, except for taxi and limousine operators, who have a threshold of CAD $50,000. 4. Place of supply rules. The GST in Canada follows destination-based principles. This means that the taxation of goods and services depends on where they are consumed or used. For most supplies, the tax is based on the location of the recipient, the place of supply, rather than the location of the supplier. 5. International trade. GST also applies to imported goods and services. Importers are required to pay the GST at the border when bringing goods into Canada. Similarly, certain services provided by non-residents to Canadian businesses may also be subject to the GST, with the Canadian business responsible for collecting and remitting the tax. 6. Compliance and penalties. Businesses are required to accurately calculate and report their GST obligations. Failure to comply with GST regulations can result in penalties, fines, or interest charges. It is important for businesses to maintain proper records, file timely GST returns, and keep up with any changes to GST rules and regulations. 7. GST and e-commerce. With the rise of e-commerce, the government has made efforts to ensure that GST is collected on digital products and services provided by foreign companies to Canadian consumers. This includes measures such as requiring foreign suppliers to register for the GST if they exceed certain sales thresholds. The goods and services tax in Canada continues to evolve and adapt to changes in the economy and technology. The government periodically reviews and adjusts the GST system to ensure its effectiveness in generating revenue, promoting fairness, and meeting the needs of the Canadian economy. Airzol is a leading provider of comprehensive tax solutions. With our team of experienced professionals and cutting-edge technology, we offer efficient and accurate tax services to individuals and businesses alike. From tax planning and preparation to IRS issue resolution, we handle all aspects of taxes with precision and expertise. Our commitment to delivering personalized solutions tailored to each client's unique needs sets us apart. Contact us today at +1 647 232 7909 and discover how Airzol can streamline your tax process and help you achieve your financial goals.